Hey, good morning, everybody. Today is Tuesday, July 28th, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks continued a 5-day slide yesterday that's seen them give back as much as 5%. Trading volume was heavier than Friday's levels across the board. The S&P 500 violated support at its 50-day moving average and tested support at its 200-day. The S&P recorded its 5th consecutive distribution day. A distribution day is a day when a major index sells off more than 0.2% on heavier trading volume than the prior trading session. Distribution is a sign of institutional selling, and too many distribution days in a month can be a sign that the market rally is in trouble. The IBD 50 and the IBD 8585 also recorded distribution yesterday, but the mid-cap 400 and the small-cap 600 escaped distribution days as trading volume was lighter than the prior session on both indexes. Declining issues bettered advancers by more than 5-2 yesterday. The New York Stock Exchange advanced decline line looks bearish. New lows bettered new highs by over 20-1 yesterday. Our market timing model is showing a don't buy signal on both the NASDAQ Composite and the S&P 500. A don't buy signal indicates that we should not be adding to long positions in our trading portfolios, and we should be completely off margin at this point. We should liquidate any position that is currently showing a loss or that when stopped out at normal stop levels would result in a loss. The O'Neill market timing model is showing an uptrend under pressure. Our distribution count is reasonable on the NASDAQ, but extremely high on the S&P 500. Large capitalization stocks handily outperformed small yesterday and now easily outperform on a 10-day moving average basis. Our swing timing model is indicating a neutral condition in the market. We're neutral at this juncture in the market. We're getting bearish signals from the market. Caution's advised. We should be reducing long positions in our portfolios at this point and should be tightening up our stops. This is a time to err on the side of caution. One final note. I'll be leaving for vacation after the close of business today. I'll be out of the office until Friday, August 7th. While I will be keeping an eye on client portfolios, I won't be producing a video market review. The next video market review will be Friday, August 7th. I will see you then. Let's take a look at the Russell 2000. The Russell 2000 yesterday gapped down below this level of support in the 1226 area. It held this final level of support down here in the 1211 area and actually closed above its 200-day moving average. You'll notice that the Russell 2000 put in this high back in June of this year, came down in early July, put in this low, went up, put in a lower high, and we've undercut this low. The Russell 2000 right now is in this downtrend and is very bearish. Let's take a look at the NASDAQ Composite. The NASDAQ yesterday was down 48.85 points, or 0.96%, nearly a full percentage point. NASDAQ closed at the low point of its daily trading range. We closed at 50.39 yesterday. Trading volume was heavier than the prior day, giving us a distribution day, but we've had 2 distribution days fall off of our count. And so those of you that are following the O'Neill timing model, we are currently on an uptrend under pressure, and we have only 4 distribution days on the NASDAQ in the past month, which is a fairly reasonable distribution count. Clear up the markings on the chart and start over again here. What I want to do is I want to put an envelope on the chart. What we're going to do is we're going to put a 1% envelope around our 21-day exponential moving average. 21-day exponential moving average we show in pink. And the reason that we put this envelope, which is this dotted gray line, is that when the market breaks below that 1% envelope around the 21-day exponential moving average, it sends our market into a don't buy signal. So right now, NASDAQ Composite is on a don't buy signal. The composite's bracketed by support down here in the 48.88 area and resistance up here in the 51.64 range. Notice how back in June we put in a high in the 51.64 area. We pulled back, we established this low area in the 48.88 range, and then we went on to make a higher high. And as of right now, we are still at a higher low. And so while the S&P 500, the Russell 2000 are in downtrends right now, the NASDAQ Composite remains in an uptrend, giving the bulls a little bit of hope. Let's take a look at the S&P 500. The S&P yesterday was off 12.01 points, or 0.58%. It closed at 2067. The S&P has gone to a don't buy signal on the market. Yesterday we recorded our 5th consecutive distribution day as trading volume was higher than the prior day. And right now we are on an uptrend under pressure. We have 7 distribution days in the past month. That's a lot of distribution. We are bracketed by support down here in the 2044 area and resistance up here in the 2134 range. The S&P 500 right now is in a very slight downtrend. We made this high back in May. In June we put in this low. Then we made a lower high back in the end of June and a lower low in July, which gives us a downtrend in the S&P 500. We'll see if the S&P can hold support down here in the 2044 area, which would be critical to maintaining any type of hope for this market for the bulls. Before I go, I want to take a look at one more stock. Allergan develops generic and branded drugs for hypertension, sleep disorders, contraception, pain, and other disorders. The stock recently broke out of this 4th stage base and yesterday traded heavier trading volume than any down day in the past 10 trading sessions. That's the definition of a pocket pivot. Allergan gapped out of this base. This is a late stage base. It's a 4th stage base. Allergan gets a 72% checklist rating. The market right now is on a don't buy signal, and so you want to be a little bit cautious here, but very aggressive traders could buy Allergan here on this pocket pivot. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.